Welcome to the Scale Up Valley podcast, where we bring the best founders and investors to help you scale a business from 1 million to 1 trillion. Today's guest is Peter Beckman, the CEO of Treyd. Peter, welcome to the show.
Thank you, Mike. Pleasure to be here. I'm a fan of the pod, so quite exciting.
Likewise, it's great to have you here, and also to have the second podcast coming from Stockholm. So really great to have the Stockholm more represented in our episodes. But for the ones who didn't have the pleasure to meet you yet, who is Peter, and let us know also more about Treyd.
Yeah, cool. So me, I would say I'm a country boy. The guy grew up on the countryside, and through some weird happenstance, I via the military went and studied in St. Gallen in Switzerland, did a PhD in corporate strategy, and then I helped large corporates do business in high-risk geographies. So a lot of work in emerging and developing countries, some corporate venture stuff, and then at last got into startups, which was, well, I guess like most of your guests, what I always thought I was supposed to do, but I had too much fun at that old job. And Treyd is it's a credit payment service. We help merchants, typically small and medium-sized consumer brands, to pay their suppliers. And the problem we solve is that if you're a brand and you don't do your own manufacturing, you buy from factories around the world. So if you're making headphones, you're buying it from a factory in China. If you're making shoes, you might buy it from a supplier in Portugal. And the problem is that you more or less always pay the supplier in advance. So something like a quarter to a third of world trade is paid with cash in advance, and that is really painful for brands. So we allow them to pay it later. And we're now, Series A going into Series B stage, Stockholm based, but we have spread out company, Stockholm, Cairo, London now. So yeah, I guess that's the very brief intro to Treyd.
Sounds amazing, and definitely this is a category buy now, pay later that we have been seeing a lot in consumer, but not so much. And I saw it even more in Southeast Asia, for instance, where of course being able to win a little bit of cash or being able to buy something and then paying it a little bit later also makes a difference in people's lives. But great to see it being applied to B2B, and especially for a big problem, as you said, for SMB companies that are doing international trades and have a huge problem in order to grow if they need to pay everything in advance and they have a cash flow, a big cash flow problem, let's say, in other words.
It is, and it's one of those. It's a very fun problem to solve, because our customers have this very curious problem that's like they're telling us, like, we have the customers, we just can't buy enough. We're out of stock for our most important product all the time, which is almost ridiculous, right? Someone has built a brand, designed products, and have them in the market. Customers want them, and they just can't sell them. So those brands are then often forced to they have to do rebates just to get more cash so they can prepay for the next order. So it's a very curious sort of almost unfair problem in the world that is quite exciting to solve, because it has such a big impact for the merchants when they're actually able to have inventory, and we help them grow, which is of course very, very positive.
Yeah, absolutely. And tell us a little bit more about the story. So you told that you have been kind of starting as a researcher. You studied and worked in Switzerland. Then you evolved into management consulting, and then you joined Antler, who paired you with your co-founder. If you could tell us a little bit more about the story.
And the story actually, the story actually it's a little bit long, because I decided to start my previous company, which was based in the US and very connected to my work with the geographically based risk analysis. So basically reading all the newspaper articles in the world or the 100 biggest languages, satellite data, etc., to understand the world through data, to think of any of those indices that you can have for like how transparent is this country, how equal is this geography. We did that in real time based on crunching quite a lot of data. We got off to a very good start, but we had two problems. The first problem was that we built it very much, deep techy approach. It's a hard problem to crack. And once we crack it, someone is going to want it rather than starting with a customer. And I think that's a challenging way to start a company. The other problem was me, because I also had quite stupid hobbies. So I was doing, a little bit of extreme sports at the time, doing speed riding and speed flying. And I took a small trip to Norway and managed to fly myself into a nice Norwegian mountain. And broke a lot of legs, to say the least. So I got
incredible.
I had like 6 months of wheelchair and some surgery and that kind of crap. And that's not a good place to be when you're trying to raise money and run a startup. So that took an end, and roughly when I could walk again, I got a call from Antler, the accelerator program, the Stockholm version of it, who asked if I was interested in applying for their next cohort. And for me, that was, of course, perfect timing and a lot of lessons learned from previous mistakes, both in terms of not flying those things and starting with customers. So Antler was a really fortunate thing for me, or for us, because that's also where I met my co-founder, Sam, who's, maybe I should talk more about. He's a very brilliant guy. But my sort of journey in there was at least like, let's start with customers first, because I mean, I basically spent my adult life in cross-border finance and cross-border business. So, and I know there's so much to do, so many problems to solve. So the approach was really to really narrow down the key problem for and with customers on the journey, or potential customers. So we then later spent most time just talking to SMEs who did international business. And relatively soon, we're narrowed down on the problem, because it was like company after company were telling us the same thing. They were like, forget about this export stuff. There's always a solution. If you solve our import problem, we'll be your customers. Like, what's your import problem? We pay our suppliers in advance, and there's no way to get financing for this. And like I talked about before, it's like, that means we're out of stock. We have to do air freight instead of sea freight, which is super expensive and bad for the environment. We have to do rebates. It's like pain point after pain point connected. So these companies were like, please solve it. Can we help you solve it? We'll be your customer, and we can pay you well. It's just like, it would be amazing. And so that's really how the company got started, by really zeroing in on that pain point. And then, of course, when we realized the size of that pain point, SMEs can look like, it is a niche problem. Of course, these are merchant brands that pay suppliers in advance and buy finished products from factories around the world. Looks like a niche, but like I mentioned, when you realize that 28% of world trade is paid with cash in advance, you also see that this is what life looks like for hundreds of thousands of companies. And if we can solve this, we can actually build something meaningful. So that's really how it got started. And then the second part of that story was, of course, I was really fortunate of meeting Sam, my co-founder in there, and his journey was, he came from a very different angle. He had built a couple of much more successful startups before. So he's from Egypt originally, did his PhD in Stockholm in Sweden, and was part of starting hive streaming when peer-to-peer was the big thing, which they exited, and was part of starting RaceFox, built one of the sort of world's first sort of wearable AIs for sport, and then got into fintech and crypto and wanted to bring sort of crypto to the real world, and had this very cool idea about smart contracts for payments. I probably shouldn't go into depth about it, but we really hit it off. He's a really brilliant guy, and we were very much like his tech and my problem or domain was a very good match. Plus, we were a really good match as people. So that was the sort of founding
story. Yeah.
Yeah.
And when you guys decided to join Antler, did your co-founder move to Stockholm to be in the program with you, or did you make it remotely?
Yeah. So he moved to Stockholm. I mean, he had always in his whole life had like one foot in Sweden and one in Egypt. So he went to Stockholm. So that's where he started all his companies, or most of them, etc. So for him, that was sort of the natural place. But then as soon as we got out of Antler, you're basically, you're coming out with 12 PowerPoint slides and sort of honed idea. And, you go out and raise money and start building and all of that. And we thought, since he had a really good network in Egypt with like really excellent engineering talent and so on, it was kind of natural that that's where we should find the first employees or first colleagues in tech. So, and we said maybe he spends like half time in Stockholm, half time in Cairo. And his first trip down, that's when COVID like hit properly and they closed the borders and all that. So we were sort of forced into a remote setup from day one, which in the end has worked really well, I think. But it was a surprise to us. We thought, because until then we spent several months, 24/7 in the same room, and from that to like, well, we won't see each other for a long time probably. So let's just play by ear, I guess.
Yeah. Any advice for the ones who for the founders or potential founders that are listening to us and that might be thinking, should I consider venture builder? Should I consider an accelerator, pre-seed funds? Should I consider Antler to join? Why did you decide to join Antler, and what is your feedback to the ones who are listening to us?
I think Antler specifically does one thing particularly, like their unique thing is it's a chance to find a co-founder. A lot of accelerators,
which is critical for the ones who are listening, and it's just about finding the co-founder. It's a critical piece. If you get it wrong, it will not work, right?
Exactly, it is, and I think if people haven't tried, don't realize like how hard it is and how critical it is. I think usually, most people have a network of people that are like dominated by people like themselves. Like I went to business school. I know a lot of people who are, consultants, bankers, etc. I don't know that many engineers. And then of course you need that. So in that network, finding someone, you're looking for someone who's very different from you, right? Two people are identical or similar is not a good base for a company, I believe. So Antler gives that opportunity. Of course, there's no like certainty, but at least you're in a room with like 100 people who are committed, who have quit their job and like, I'm gonna build, and people with various backgrounds. So that was, for us, it worked perfectly. And that I think is the key thing. Of course, there are other things like you get a network of investors. If you haven't built a company before, you might not know that many VCs or angel investors, etc. And of course, you get really interesting lectures and so on. But the key thing I think in Antler is finding a co-founder. That's the really unique value.
and the branding itself that then kind of gives a little bit more of credibility to the startup, especially in the earlier stages of financing, where you might only have a PowerPoint and a scrappy MVP and the dream to share, and of course the team. Just saying this is coming from Antler, maybe it also it will not solve everything, but it helps a bit to create another layer of trust, right?
I think so. But we were the second cohort in Stockholm.
Okay.
So a lot of investors actually asked us a lot about like, what do you think of this? What's like, what do you think? Which companies are interesting, etc. I think people were really curious about this new, very ambitious accelerator. Now I think they have much more of a brand name, of course. But it also helps. I mean, I didn't have a lot of relations with VCs or angel investors, and coming out of there, I don't know, you have the 20 first names that you have already met one way or another, and they will, you know, bring in the next 40, 50 names. So it helps with speed, I think.
Yeah, and that process, of course, it's great that you are matched with someone that doesn't look like you, and of course it's critical to have a technical founder, especially when you have a business background, and the opposite also works, to have someone who matches you with someone with a business background, being you technical and maybe only knowing other technical people. And then how to create trust, and how do you make sure that this is the right co-founder for you? Because it's also a short period of time when you decide, let's join forces and let's move forward with this idea together. Any tips there from your experience to other founders who are thinking, oh, maybe this person is a good fit for me, but I don't know, maybe in 6 or 12 months I will find out that this has been the wrong decision, and we are not compatible with each other, we are not a fit. We know properly that today you guys are a fit because you have get to Series A, and it's been a long time already, but at those times there was a lot of risk involved with being matched, right?
It is, and I think it's a really good question, because that is the sort of hardest piece. Both of us worked with other people within the accelerator before we sort of decided to work together. So we went through a few iterations of realizing that we were with the wrong person. And of course, we hit it off, I think, to a great extent, sort of intellectually, like feel like mutual respect. But the key question, exactly like you're asking about, was this sort of trust. And for me, I mean, I had at least, I think it was probably easier for me because Sam, I mean, he had and has a family in Cairo, and he was like 24/7 in an office in Stockholm. And so for me, it was like, if that doesn't prove commitment,
committed. Yes,
exactly. Nothing will. So I think I took some comfort in that this guy is for real. I mean, not only has he done it before, but he's, you know, on, and that is of course quite a painful thing. How he dared to bet on me, I don't know. I guess I would have to ask him that. But it is. There was something. I am a fairly big believer in hard work, and I think you kind of, when you're working together for, even if it's a short period, but it's still months, and you kind of see like who's there early, staying late, working on weekends. It's like there is something there. I believe. I think it is a signal of someone that you probably want to bet on or work with. And I think that's, I mean, that's also, I don't know how people, if it's possible to build that type of startup, you know, the VC backed approach of building a company, which of course is a niche, but doing that with the speed required without like really hard work, I have my doubts.
Yeah. So Sam needed to come back to Egypt, Cairo, in the beginning of 2020. So you started the company in October 29. The program was August 29. I'm just looking to your LinkedIn, right? So And almost in the beginning, you guys needed to split, and Sama needed to come back to Cairo, which has been a blessing in disguise, that then you were able also to find great talent in terms of product and engineering and tech over there. How has been those initial months until you get to Seed? What did you prove? Just to share also a little bit of your lessons learned and your journey with the ones who are listening.
Yeah, I mean, we wanted to really get to do transactions, do real business with real customers. We took that approach since day one of like solving a problem for customers, and we didn't have a crystal clear image of what that was going to be in reality. So we thought we need to go out and do and iterate. So we raised money, and it was a lot of complications about like raising money, and especially getting credit at that time when everybody thought the world is going into like the dark ages, basically. Had some challenges. So we spent a lot of time on that, but the goal was really to get to do business with customers and learn and iterate. And we felt a lot of, I think, stress to get moving, like get something out there, do something. And it took us a few months to find the first couple of customers, and it was a fun moment for us, because we had 2 customers. It took us several months to actually find them and actually get them to commit and sign something. And both of them actually called. We were doing the first couple of transactions within a couple of days, and both of them called us like, can you please explain again what we just signed? It's like, I don't get this, because we had this very complicated setup and structure. And both of them also asked us to complete the transactions on the platform. And we had built the platform and we thought it made sense. It obviously didn't to them. So we had made things way too complicated. So both customers like, please please help us use your platform, and please explain again what we just signed. So we were like, oh shit. But both were also like, this is so good. Like, can we please have more? It's like, finally, I get. So we had this curious thing about
why they bought the benefit or the problem that you were solving. They didn't buy the kind of the solution. They trusted you that you would bring the solution to the problem that they bought, right?
Exactly. And they were like almost ridiculously happy for having a solution. So we really felt like, that we're on the right path.
Yeah, as soon problem as solution fit. Yeah,
it really was. And then it was for us, we had something like 9 months of runway, and so we were like, we need to get this to self-service, and we need to find a scalable way of selling this. We can't take 2 months to get 2 customers, then we're not going anywhere. So we started iterating. We brought in one person in Stockholm as well on the commercial side, Martin. So basically it was a very simple division, Martin and I, to figure out how to get customers, and Sama and our 2 guys in Cairo to build and iterate. And then me and Sama were like constantly just like, I don't know how much time we spent on trying to figure out how to make this intuitive. But in the end, it took us, say, something like 4 or 5 months, 6 months to get from that to a self-serve product, which was an amazing thing. Once we saw the first sort of customer coming in that was just like, they didn't ask for anything, they just went in and started using it, and it's like, we're getting there. And the second thing for us was when we also found our first sort of scalable go-to-market motion. We tested like everything, and for us it was really like this outbound sort of email-based approach, which was it was like black and white. It's like, this works. Now we have something to iterate on. So we basically like, okay, we got the self-serve, we found a way to sell it, and then we went and raised the seed round, which we did with J12 in Stockholm, end of March 21. Then
great.
So that was fun. And then with our sort of newfound way to sell and self-serve product, we were like, oh, let's hit the gas. We have something like 12 months to run, so we better hurry up. And things went actually a bit crazy. So we went from, I think, an acceptable sort of 15% per month growth or something like this, which I guess is sort of, you have to have something like that to be able to raise a seed round. And we went from 15 to 50 per month, which is very much. It's like, my God, what is happening kind of feeling. And also, my God, we'll run out of money. Quickly, because fintech has, especially if you're doing like payments and credit, you have a liquidity requirement. So we realized that, this is gonna go like way too fast. We need to go and raise money like now, basically. So, I mean, we were far from mature enough to actually go and raise a Series A from many perspectives. I mean, we hadn't really had any board meetings. We were 5 people, but things were like going really fast. It was that, I think that's what people describe with that sort of product market fit feeling, when sort of people just are sort of dragging your service out of your hands. It works. So for us, it's like at least we have very good numbers, happy customers staying, and we're growing really fast. So let's go and raise some money so we can build a proper team. And the second thing for us was also, we need to prove this internationally, because we had been only active in Sweden for very pragmatic reason of that's where we were. And Sweden is a very sort of practical place to start a fintech. It's like the access to data, the regulatory environment, etc., is fairly, it's a good place for fintech, which I guess is one reason of why there's so many here. But we thought this service is going to be a sort of global thing, because it is this niche. There's a lot of tech to build, so it won't look like, you won't have a dozen in Sweden and etc. It's like, it's going to be a few actors figuring this out and building this on a global scale. So we need to prove that this works internationally, to the world and to ourselves, because that's what we wanted to build.
But this is kind of post Series A, where you are now.
Yeah, right? Exactly. So those were the two things. We were like, okay, we have something that really works at this stage. We need to go and raise money so we can build a team and take it internationally. So that's what we did. So, and again, as always in fintech, you raise both equity and debt, or credit partnerships, what we call them. So that it actually took us a bit of time until closing was like 6 months, which was, well, admittedly painful, but we kept growing during that time, and even kept hiring and so on. So that was somewhat painful. So we closed at end of March 22, and again sort of hit the gas. But so from our sort of, when we started racing, we were 5 people. Roughly like 18 months later, we were over 50. And we had opened in the UK, most importantly, also in Denmark. So things were going relatively quickly, and that was cool. So I mean, we opened in the UK this summer. Now it's something like 40% of our business is there. So those couple of things really worked for us, to say the least. It is a global problem to solve. The world wants it, and now it's fun that we actually took that approach from day one. That we knew, or we were at least convinced, that this needs to be sort of a global solution, which really affects how you build things. I believe, or it's dramatically different. Building something for Sweden is fairly straightforward. Building something for the world is anything but straightforward, I think. So yeah, it's been a bit crazy in all honesty, but really, really fun. Most importantly, like, we still have really, really happy customers, which is
critical.
It is, and it's really motivating.
Happy teams and happy customers. That's an important foundation, and the business model that works, right? That is important.
Exactly. And it's been curious. I mean, I guess it's also common in the beginning. You're just defending the idea, but like, why is this needed? Why it's like,
right.
Why wouldn't just the bank do this? All those sort of very obvious things, and you're
lot of belief.
Feels like you're talking sort of baby language. And now that's very obvious, I think, to people from the outside. It's now you're getting into the interesting discussions. Yeah,
exactly. And in terms of your lessons learned, you started almost a distributed team from day one with people with your co-founder, with a technical team in Cairo, and then go to market and business in Stockholm. How is it evolving now with London and Copenhagen, I assume in Denmark?
Yeah, like I said, exactly. It was a bit of a forced thing for us, but it was also fortunate, and we have landed in what we think of it as hubs. So we actually have an office in Cairo where almost everyone in Egypt works. Not everyone, because we allow for some distributed. When we find the right person, it's fairly easy to jack in. We have a hub in Stockholm and a hub in London, and we're like, let's say 40-20% in those locations. And as we'll continue to add hubs like that. We have sort of most of our, let's call it corporate functions on the commercial side in Stockholm. We have tech mainly in Egypt, but now we're trying to mix a bit. So we have more product management and bringing engineers to Stockholm as well, because we really don't want to lose the sort of engineering and product culture. Because if we have only like, sales, marketing, legal, finance, credit good in one office, there is a risk of losing that. And of course, the same thing if you're only in product and don't really have that sort of close connection with commercial, the things going on. People talking about customers or hearing what support things come up, etc. So I think we're trying to have some overlap now that we can to mix up a bit, and I think that's really important going forward. As when you're a tiny team, like coordinating and sort of cross-functional knowledge sharing is not something you have to spend a second on. It's just automatic. I mean, everybody knows everything. I think our engineers in the early days knew as much about our customers as someone like me who was doing sales. Because we're like, when you're just a handful of people, that's what you talk about. It's so obvious. And then of course you get gradually the small engineering team turns into multiple teams where you divide, and it's all of a sudden it's marketing and it's sales in the UK and sales in Sweden, and all of a sudden you have to work a bit harder, I believe, on getting that integrated team that can still move fast, where people are aware of what's going on. The commercial people are very sort of I don't know, they're up to date with roadmap and technical challenges, what can be done and what can't. Engineers or product managers are really up to date about like customer discussions and feedback kind of thing. At least that's what we're trying to do now. So that's why we want to mix a bit across locations, so we don't end up with like silos and so on.
Super interesting and great advice there. It makes a lot of sense. Because I assume that when you open the London hub, it's mainly for commercial functions, kind of. I imagine SDRs, AEs, maybe marketing as well, right?
It is. We do also have credit there. So our credit team is our most spread out. They are everywhere, which has been quite good as well. So so even there, although the sort of main point of opening in London was to set up a local sales team and account management, but it is good to bring a bit sort of cross-functional. We'll have credit and soon product management for credit in London as well. So I think I'm a bit of a believer in that sort of
kind of
coffee machine chat.
Exactly.
Still, although we're spread out, I think we get a little bit best of both worlds and trying to mix and match. And that's, I think, one more thing, like we are spending, I don't even think of it like that, but on travel, like making sure people meet a bit. That's really sort of lubricant for, I mean, almost everything works well through Slack and Zoom, etc. But actually also meeting is really helpful.
Absolutely. And sometimes I see also a trend meeting just to get to know each other, just spending a week in the other office, just being together, and sometimes not even having meetings, just being with each other, because then nowadays, fortunately, you can do a lot of stuff remotely. Then when you are there those days all together, it's all about to get to know each other, and we don't need to leverage the time to talk about business, because then we are doing this in our normal meeting rhythms, let's say, and routines and remote setting.
Exactly. No, 100%. I believe that's exactly it. We just met the whole company for the first time, gathered in Egypt a couple of weeks ago, and it's curious when you're doing, because you realize like we probably shouldn't have too much of an agenda here, and then you still do, you still have some sessions, but in the end, it's like 99% of the value. And the value is strong, but 99% of it is just being in the same location, like having food together, those, or coffee or chit chat, or all of those things are what really matters. And then, of course, yes, you can have some agenda, but we didn't have time, I guess, for people to like spend 3-4 days without normal work. So just like working in the same location and having some time for food and coffee, it's really brilliant, and it's not really much harder than that, I believe. As long as you have the right team, and we've been really lucky there. So
that's amazing. And in terms of the fundraising front, we have already talked a little bit about the journey. Something that I really enjoyed about your journey is that you were able to get into Series A in a very scrappy mode in terms of the team size, and sometimes that even helps. And I assume also from Antler to Seed, it has been also a very demanding moment of the company, because for the ones who don't know, I think it's kind of an 100 to 150K check to go from almost pre-seed to seed. Maybe you are able to raise even a little bit more from angels before you get to seed. But
we did. Net, we had like 50K out of the accelerator, which doesn't take you very far. Of course,
it was
you
more,
can live cheaply and use your savings, but and I don't know, maybe it has changed, but it's a relatively modest check. That's not really the value you get. So we went and raised money from angels. First thing we did, basically, for us to be able to hire and give us a little more runway. But still, it's a fast way to seed, I think. And I think we did a couple of things right. Of course, I mean, one of the best classic sayings, like it's the curve, not the dot. And I think we tried to leverage that because we didn't have, the resources to have a very big team and etc. And didn't have a lot of time, but we had a really steep curve. And so that's what we aim for. We have to be fast and make sure things are up to the right. We did one thing, I think, really right. We started sharing our sort of monthly updates with investors. So like any investor I met, angel or VC or whatnot, I started sharing the monthly update. Perhaps it wasn't even perfectly monthly, but as frequently as possible, with good and bad, based on the theory, it's the curve, not the dot. So if we're improving every week, every month, probably people are going to see that. And I think that's one of the better things we did in the beginning, because that allowed us to then, once we found, we had the basic things, self-serve and a reasonably scalable way of going to market. We could say, yeah, let's go fundraise. And we already had a lot of names on the list that had a bit of a relationship with us and had seen the curve of development. So that, I think that was critical for both seed and Series A, actually.
That's great advice there, and it also creates a sense of, it almost forces you to create an update that maybe you already need to share with your own investors in your cap table, and you are just sharing also with some people outside of the network that can be potential investors later, or that also can be helpful just seeing the updates. Maybe you also have an ask at the end of the updates, if somebody knows potential customers or potential leads or whatever it is, and people can also know, how can I support, right, the progress of this company and this team.
And it's also like having a board meeting with yourself.
Exactly. That's the point I wanted to make. Thank you for that.
Yeah.
Absolutely, it forces you to have that regular board meetings and do the reflection by just writing a very short email and being straight to the point. And it takes time, and it makes you reflect about how you are progressing, what should be the priorities moving forward. So that's definitely a great exercise and great advice.
It's fun to look back on them as well, because like they started out fairly long and are getting shorter and more to the point over time, which is probably a sign of like it is more chaotic in the head in the beginning, and gradually you're sort of hopefully getting a bit better grasp of what you're doing. It's a fun thing and really helpful.
This is a good encouragement to also start doing, even if you feel that this is not perfect, or what will be the impression of the ones who will be receiving it. Just start doing it, and you will get better, and it will also show that you have improved, which is great. So it shows that you are able to learn quickly, which is super important in a startup, right? For the ones who are looking to your progress.
Yeah, exactly. I mean, it is the curve, not the dot. That's all that matters.
And just reflecting a bit before getting to the last segment of the show, that we are becoming short in time, which is, of course, this role of a founder and the role of a CEO. So I've been kind of working a lot in the area. So you are clearly an expert in this area. I've been studying it. You saw the problem for a long time. Also, I've been working as a consultant. So all the equation was clear for you, but then jumping and becoming the CEO of a startup, that's another challenge, and you need to be able to deal with so much, the speed, the uncertainty, and so many variables at the same time, and making decisions without data. So how has been your experience, and any experience that you'd like to share with the audience that is going through the same journey that you have been through?
It is a good question, because it feels like every 4 to 6 months so far, it feels like a new job. You realize like what I'm doing now doesn't work anymore. I need to, something's different. I need to switch my role. I think in the beginning, I mean, for a long time, my key job was, I like to call it like pulling rabbits out of hats, because that's really what it is. Like, we need in whatever, usually in a very short time, we need to have a way to sell. We need to get one more customer. We need to, whatever it is, right? So it really feels like you need to just pull rabbits out of a hat. That's the main job, and obviously having an idea where to go to. I think gradually that changes into a lot more about other people. I think now I also realize I've been thinking about this lately, that I mean, until, I don't know, when you're like, I don't know, 20, 30 people, you get a lot of effect by just working really, really hard. And of course, a few rabbits out of a few hats, but gradually that is not the difference maker. It's really all about everyone else being able to, do their best. So that's a very different kind of role. And my rabbits are relatively small compared to everyone else pulling rabbits all of a sudden. So
yeah,
I don't know. I think that's a very natural progression.
Going from a doer to a leader, and being accountable not for the results of what you do, but by the results of what your teams do. And it's all about providing that alignment and removing obstacles to those teams to be able to be successful. Right? So it becomes more and more tactical and strategical and less operational.
It is, and the fun thing, I think, because you're basically the first one to go through that, and then you hire someone who's any role, basically, like a CFO, like day one, that person is like actually doing accounting.
Exactly.
And a few months later, that person has a team and is going through exactly the same process that you just went through. And first you hand it off to that person, super happy, and then you realize that person needs to hand. So I think that's natural sort of progression.
Absolutely, that's a great point. So let's go to the last segment of the show where I ask you a quick question. Give me, please, a brief answer. Starting with the first one, if you would have the opportunity to have a coffee with yourself at the beginning of Treyd, what advice would you offer to your younger self?
I think to my younger self, like, start earlier. This is the best thing in the world, and there's no other way than just doing it. Like, start and iterate. Why did you wait for so long?
Great.
I think that's the key one.
What are you the most proud of on your journey so far?
So we are really, really proud that we have the guts, because that's like, in all the dark moments, that's like to dare and just like keep running and doing, and not sort of panicking or losing course and listening to it, but like the daring through the time. I think that's the most important thing for us.
Love it. Worst advice ever received?
I haven't gotten a lot of bad advice, but one thing that I'm not a huge fan of is like advice that comes with a request for equity.
Okay.
That's something that I kind of react to. And there's a lot of that in the beginning. And you realize, and I think especially now, that we said no to so many such things has been really good, because like, you want that for employees, rather than some advisor that will be there for a very brief period of time and help you solve a problem then, but the equity will be there, will be theirs forever. So that should be for people who are in the company, I believe, for a long time. So I guess that's the worst kind of advice. Doesn't matter what it exactly what it comes with, but with equity, it needs to be really friggin' magic.
That's a good point, especially when you have so many people asking for that. If you would give everyone the 0.5 or 1%, then you might have a problem in terms of your cap table, and as you said, even the value maybe doesn't fit the percentage that has been given as well in terms of value received. And now the resources. Favorite book?
For me, this switches every week. I think the one that I like, the one I think about recently is one of my sort of old favorites. It's called Poltava, or like The Battle That Changed Europe, I think, in English. So it's a curious book it's a whole book about one battle that was a loss from the Swedish perspective, and destroyed the empire. But it's an interesting story about, there was this Sweden was an empire back in the days, and they had a very famous king who led from the front, and they were sort of attacked by 4 countries at once, and they prevailed for like 10 years with that.
Wow.
And then this battle was the only one where he was not at the front, and it was a big loss. They lost the entire empire basically based on that one battle, which is also the battle that more or less created Russia. But it's a really interesting story, I think, about sort of leadership and daring and so on. It's a fantastic book.
Great contribution to the list, and great factors as well. Well, reasons. Favorite movie or series?
I don't watch a lot of TV. I threw mine out in 2006, but I think some films like No Country for Old Men is amazing. That would probably be my all-time favorite. The only movie I ever watched it and just rewatched it again instantly, which is this theme about chaos and order.
And finally, your favorite podcasts, excluding this one.
Nice addition at the end. I listen to a lot of startup podcasts. I think 20 VC is fantastic. I think everybody listens to All In. That's sort of the weekend treat.
Sounds great. Peter, it has been a pleasure to have you on the show, and we wish you all the best in the upcoming chapters, and you are always invited to come back to share the progress.
I look forward. Thanks a lot, Mike. Have a good one now.
Thank you. You too.
Bye.
And to our community, thanks for being on that side. We keep bringing you the best of the best to make your life a little bit easier as you scale up your company. See you soon and keep scaling.